Hello everyone, welcome to CommerceNet Scholars. I hope you all are perfectly fit and fine and you are being regular with the studies. In today's video, we'll be discussing about the different types of marine insurance policies. What are the basic categories or types of it? In my previous videos, we have already covered the types of fire insurance policy. Today, it's the time for types of marine insurance policy. Let's start with the video, but before starting, a reminder for you all. Watch the video till the end if you really want to understand the topic. Do give it a like if you really like the video, share it with your friends as much as possible, and most important of all, subscribe the channel if you haven't subscribed yet. Let's proceed with today's topic, that is types of marine insurance policies. Now, the first type is the time policy, wherein the insurance for any loss related to marine is taken for a time period, that is generally for 1 year. So whenever you are taking the insurance policy considering the time period, generally 1 year, we are referring it to as the time policy. Next we have the voyage policy. Voyage policy is taken for a particular voyage, or you can say the journey of the ship. Whatever distance the ship is going to travel from one place to another, for entire journey or for the entire voyage of the ship, whatever policy is taken to protect the ship or the goods on it, that is referred to as the voyage policy. Next we have the mixed policy or time and voyage policy. So basically this kind of policy will cover both the aspects, that is, it will be generally taken for some time period, and also it will be taken for the for the duration or the journey for which the ship is traveling, in case it is more than 1 year. So in that case, if the time that is going to be taken is more than 1 year for a particular journey, in that case it is always advisable and suitable to take mixed policy, which will cover both the aspects of time and voyage. Next we have the valued policy, wherein we'll determine the value of the subject matter in advance. That means whatever value of the ship we have to determine for the policy, or the value of the goods, that is the cargo, that we'll be deciding well in advance, not at the time of loss. At the time of entering into the policy, it will be decided. Next we have the unvalued policy. In unvalued policy, the value of the ship or the cargo will be determined at the time of the loss, not at the time of taking the insurance policy. Next we have the floating policies. These policies, all of them, the marine insurance policies, more or less you can see that they are similar to the fire insurance policy types only. So talking about floating policies, so basically this is taken for a long term cargo insurance contract. Whenever it is impossible for a merchant or for a trader to keep a track of every shipment, whatever goods he is transporting from one place to another, what is the quantity of the goods, in that case a rough estimate is taken on which the policy is issued to the insured by the insurance company. Next we have the blanket policy. As I told you in the previous video when we were discussing the types of fire insurance policy, so whatever other types of risks are there, that will be insured under blanket policy. Whenever we are talking about the blanket policy, it will cover all aspects of risk. Generally you can understand it this way. Suppose you have taken the policy for we have an example here. Let's go through it. Suppose a blanket policy is taken worth rupees 1 lakh on the cargoes to be shipped by the exporter, but the actual shipment made by him amounts to rupees 1,20,000. So the policy that you have taken was of 1 lakh, and whatever actual shipment was there of the cargo, that was 1,20,000. In that case, additional premium is to be charged over the excess amount of rupees 20,000, as protection has been granted for this excess amount by the insurance company. So in case you have taken the policy initially of 1 lakh, but your goods are now amounting to rupees 1,20,000, so for this extra amount you can pay extra premium and get those value of goods also insured. So blanket means what? You are covering all the aspects that are related to the risk of marine. Or in case, say for example, the other case can be, if the actual shipment is estimated to be 60,000 against the policy of 1 lakh, then the return of premium is to be made on the balance amount of 40,000. So in case you have taken the insurance policy of 1 lakh, but the shipment that you are sending, that is only of 60,000, so in that case that extra 40,000 will be returned to you. Next we have the fleet policy. Fleet policy, whenever we are getting a number of vessels insured under a single policy, that will be referred to as the fleet policy. Named policy is generally referred to as the specific policy under which the name of the ship, the value of the cargo, everything is mentioned by a specific name, that so and so name of the ship and so name of the cargo is being transported. So in case the same name is facing the loss, only then the insurance policy will be taken into consideration, only then the compensation will be paid. Next we have the currency policy, that is taken against the currencies. There are certain fluctuations in the currency of two different countries, so whatever risks that are arising or whatever losses that are arising out of these currency fluctuations, this policy is taken for this purpose only. Next we have the PPI policy, that is the a policy proof of interest. Whenever the insurable interest is absent, say for example the ship owner is taking the insurance policy for the cargo as well. So in that case, the ship owner has insurable interest for the ship, but he has no insurable interest for the cargo. So in that case, you will be taking the PPI policy, wherein it will be a mutual understanding and it will be a proof between the cargo owner and the ship owner that they are getting the goods also insured as well as the ship. Next we have the port risk policy. Whenever the goods have to be transported from one place to another, and when the ship is being anchored at a certain port, if there is any risk associated with the cargo or with the ship, that is covered under port risk policy for the time being the ship is anchored at the port. Next we have the construction builders risk policy. So these kinds of policies are taken for the builders of the ship, and for a period exceeding 1 year they cover risks of vessels during the period of construction. So construction builders risk policy will be taken for a period exceeding 1 year, but obviously you cannot construct an entire ship in a 1 year. If you are preparing it for the transports of goods and services, it would take a longer duration. So whatever vessels you are manufacturing, all that will be whatever construction work has to be done, all that will be covered under construction builders risk policy. So I just hope whatever types of marine insurance policies we have done today, it's clear to you all. Any doubt you can mention down in the comment section below. That's all for today. Thank you and have a nice day.